I think inflation basically is back down to the Fed target. Also, I think that
you think inflation in America is at 2%?
Don't do drugs. It's too expensive.
Because you might have listened to the Fed minutes, and in it they say, absent of the collapse of SVB, they would have done 50, not 25. And I think that factored in upsetting the stock market today. But of course, the bulls have a counter to all of this. Core CPI, that doesn't matter. And it's the Fed who's being delusional, concentrating on core CPI. The reason behind all of this is, but housing is actually going down. Rents in real life are actually going down. And the Fed is not paying attention at all. Perhaps the proponent of this theory and this opposition is none other than the good professor from Wharton, Jeremy Siegel. Take a look.
By the way, speaking about the core, if you actually put real shelter prices in, I mean, from Apartment List, Zillow, or the Case-Shiller number, I've done the calculation. Core has been zero inflation for the last 4 to 5 months. So it really wipes out the core if you use real shelter prices instead of the, as we know, dramatically lagged prices that the Fed is using. So really, core is not a problem.
So his argument is, okay, they're counting rents based on a lagging indicator. They're looking at past rents. They're not looking at what's going on right now. Unfortunately for the good professor, he's been saying lag since last year. So my question to Professor Siegel is, you think core CPI been lagging since last year? Maybe it is lagging for a month, 2 months, 3 months, but this guy been singing the same tune since last September. At a minimum, take a look.
The inflation is basically stopped. I mean, you had a headline just came across 3 minutes ago. Oil back to January levels. That's before Russia invaded Ukraine. You can see what's happening to commodities. We're going to get the Case-Shiller index next week. It's going to show no increase or a decrease for the first time in years. And that's a lagged indicator. On the ground, commodity, all the prices are going down. And now, when house prices are going down, when rental rates are going down, and I don't mean they aren't jumping from where they were a year ago, but not as high as they were now. If you take a look at these indices, we should have had a negative number there instead of a positive. And what that means, the way they construct it is we're going to get 0.7, 0.6 plus 0.8 plus, for month after month after month, in 40% of the core, it's going to look horrible. Oh my God, the Fed isn't succeeding. We have to keep on hiking rate when it is giving a totally distorted view of the actual on-the-ground rate of inflation. He said there's the forward-looking one that uses current data on what's going on in housing, and then there's the one that the BLS calculates, which is some crazy average of past data. And he said, well, which one do you like? And he said, and I was shocked because Chairman Powell said, we're using the one that uses past data. And this is not just a technical point because these two indexes, remember, housing is 40% of the core inflation, which is what Powell talks about all the time. If you use the current one, you actually get negative prices and rentals. But don't forget, the housing component in December will still be plus 0.7, plus 0.8, which is 40% of that index. And it'll continue to push up as the housing market goes down. And that's the nature of the statistics that they're using. Tell me what core inflation is. I'll tell you what it is. It's negative. It's negative now. It was negative next month. It will be negative next month, and it's actually been negative for the last 2 months. So if the Fed stops looking at stale housing data, and I don't know why they don't, they would actually realize that inflation is, as I said a month ago, over. We are actually having much less today. You really should be subtracting about 3/10, 4/10 off of that index to get current inflation, which would put not only the overall, which you're right, is expected to be down 0.1%, but actually even the core. Now it's expected to be up 0.3%, but that's because I think we're going to see another plus 0.6, plus 0.7 in that shelter. And that is going to be in that index for almost a year. So by looking at the lagged way the Fed looks at housing, it's overestimating that inflation. And that's one of the reasons why I say they've got to slow down. We are in a negative inflation mode right now.
And folks, here's the reality. I don't know about you, but did your landlord knock at the door anytime this year and said, you know what, I feel kind of guilty about robbing the American dream from you, so I'm going to reduce your rent because I'm feeling guilty right now? Or did they say that, hey, Jerome Powell says that we have a disinflation process in the economy and the CPI is going down, so I'm going to reduce your rent? Of course not. Most Americans are paying insane amount of rent right now. Most Americans are stuck paying 40% plus of their incomes on rents alone. And when the good professor says that all rents are going down, in reality, if you look at the Zillow data, well, lucky for him, here at the Maverick of Wall Street, we did the job. We looked at the Zillow data and here it is. Look at the trends. This is Atlanta, all rents, apartments, houses, all rents. Look at the trend this year. It is blasting higher, way above last year's trend. Can you guarantee that rents will go down later this year? Because if the trend follows, we're going to beat last year's trend in Atlanta and rents will move significantly higher. And this is, by the way, the data from Zillow. When we look at LA, look at the trend that we have so far this year, above last year's trend. Sure, it is cooling down for now, but can you guarantee that as we head to the summer season, we're not going to see rents accelerating in LA following the trend from last year? How about New York City? These are rents all in all. The trend is way above last year's trend so far this year. Can you guarantee that rents in New York will go down anytime soon? Because the trend says we're going to beat last year's trend in New York City. When we look at rents for single-family homes alone in New York City, look at this, not even close. The trend this year absolutely obliterated the trend from last year. How about Orlando? These are rents all in all. Look at the trend from this year versus last year. It appears that rents in Orlando will beat the trend from last year. And my question is, what is the good professor smoking right now? We will look at Orlando's single-family homes. Look at the trend that we have so far this year, way above last year's. Can you guarantee that this will go down later this year? The inflationary process is still here, and it is accelerating, not going down. How about Phoenix? All in all, sure, the trend is below last year's trend, but it is shooting up higher again. Can you guarantee that it will make a U-turn and go south again? Because it looks right now that rents in Phoenix are about to go past last year's trend. We'll look at single-family homes rents in Phoenix. The trend so far absolutely wipes out the trend from last year. Without a doubt, there is rent inflation in Phoenix, in Orlando, in LA, in New York, and it goes on and on. How about Vegas? We will look at rents all in all. Sure, the trend is down versus last year, but it is accelerating, and it could catch up with the trend from last year, if not even beat it. We'll look at single-family homes rents in Las Vegas. The trend is absolutely strong, way stronger than last year's trend. We are definitely seeing inflation in prices of rents in single-family homes in Las Vegas. So again, what is the good professor smoking right now? Because I'd like some of that. I'd like some of that optimism hashish.